Dan Frio here with your real estate news for July 17th, 2025. So what I'm going to do today is I'm going to go over the headlines that we're seeing in today's Yahoo Finance and break down these numbers because today I think, folks, is going to be a Cinderella story. We're going to go over retail sales, how those went a little bit higher than expected. We go across the map over through here. Wall Street is pushing a defend Powell from the Trump attacks. I'm going to have to agree with them on that one. You go down through here. U.S. jobless claims fall. That's great news. U.S. retail sales beat expectations and oil staying steady. I'm going to explain how all this data right through here is good news, and it's going to help these out quite a bit today. So, folks, my name is Dan Frio. I do this report twice a day to inform you guys what the heck's going on with those and the whys behind it. I also have live events and other videos to talk about different mortgage programs, because if you're watching this video, most likely you're looking to buy or refinance. So I'm actually a federally licensed mortgage loan officer licensed in all 50 states. I have a slogan: one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, I'm going to give you the news first because you're here for these things, not to hear about me. So let's get over to it. So here's what we're seeing in the news today. If we go to the headlines, retail sales jump in June. We're going to break down those in a second. And then we're going to first look at the jobless claims that we got today. So let's get over to the jobless claims because this will have effect on interest rates, because we're focusing in on this to see if the job market's really deteriorating like a lot of people expected, or is it kind of steady sailing, that putting a little more pressure on the Fed to cut rates. So let's get over to what those numbers look like today. Initial jobless claims fell by 7,000 to 221,000 in the week ending July 12th, the Labor Department said Thursday. That's the fifth straight weekly decline. That's fantastic, claiming there's lowest levels since mid-April. So that's one of the pieces of the headlines that we got there. That's great news for the jobs market. Now, going over to retail sales, let's see how those did, because a lot of people thought these would fall off a cliff with all the tariffs. Retail sales rise more than expected in June. So let's go down and see what's happening. Retail sales rebound in June, an indication that the President Trump's tariffs are not significantly impacting consumer spending habits yet, because a lot of the tariffs aren't impacted in these numbers yet. So that's what we're going to focus in on there. And then another piece of the puzzle that's coming out, a lot of people are missing, corporate earnings are coming out, and they're doing fantastic. Let's get over to just what we saw yesterday, and I'm going to tie in how all this truly plays a role in these over here, folks. So let's go to corporate earnings to see the health of the corporations. So far what we've seen is the job market's pretty good. Retail sales, the consumers doing pretty good. Well, how corporations doing now? Well, let's go over and see what happened yesterday. So we got some headline earnings estimates out. Here's the earnings calendar for this week. So yesterday we had Bank of America, Johnson & Johnson, ASM, the Goldman Sachs, and Morgan Stanley all come out with earnings. Let's see how they fared. So if you go over to Bank of America, it was expected they would earn per share 0.86. They earned 8.89. If you go to Johnson & Johnson, they were expected to earn $2.68 a share. They earned $2.77 a share. And then you go over to ASML, they were supposed to earn $5.15 a share, and they came up to $5.09 a share. Look at how all these earnings report exceeded their estimates. Okay, so this is where they actually came in, and this was the estimates. If you go over to the economic calendar, let's break a lot of this down. We have continued jobless claims today. It came in under expectations, because I think a lot of people are just saying tariffs are going to be completely detrimental to the world, to the U.S., and the economy is just going to crash. So far, we haven't seen it. So let's continue to go through with this. Continued jobless claims. Last reading was 1.95 million. Stayed at 1.95. Core retail sales, here's what blew out the numbers. Last reading was negative 0.2. A lot of consumers were sitting there saying, we don't know what's going to happen with prices. We don't know what's going to happen with our jobs. And as the news comes through, it's not as bad as we're expecting. So retail sales actually jumped from a negative 0.2 to positive 0.5. We have export prices. They went from a negative 0.6 to up 0.5. And here's that number we really wanted to look at. Initial jobless claims. How's the job market faring right now? Well, last reading, 228,000 people got fired. I guess that's the best way to say it, fired for the first time. I was expected to increase a little bit to 233. It actually went down to 221. So if we recap all this stuff and how it's affecting these things, let's get over to it. Just paint the picture for you. If you go to the jobless claims, not falling off a cliff. If you go to retail sales, the consumer's pretty strong right now. Corporate earnings are good. So what in the heck is the Federal Reserve going to do at the next meeting? Well, they're not going to do anything, because if you look at all this in its context, it's not a bad economy that we're seeing right now. I know a lot of people are feeling a pinch, and I get it. But if you look at the dynamics of everything, even with the mainstream media telling us every day how terrible everything is, again, you look at the jobs market, not bad. You look at the retail sales on how the consumer's doing, not bad. Corporations are doing good. So what's the catalyst that's coming down the pike? Tariffs. How bad are the tariffs going to be once they're all implemented, all this? So I'm not saying tariffs are out of the picture right now, but I'm saying so far, the dealings that we have or the news that we have on all this stuff isn't so bad a news that you're hearing on mainstream media. So let's get over to what my thoughts are. What's happening right now is I think a lot of people are pushing their monies out of the bond market and into the stock market. And if you're not in that camp yet, if you go through here, you have the S&P hitting record highs every day. All you hear is NVIDIA, and you hear the AI trade. So people are dumping money into the NASDAQ stocks because of that. You have the Dow Jones doing okay right now. We have oil's up just a tad, but we have the VIX coming down, or oil 10-year Treasury yields are coming down right now. So across the board, this is looking pretty healthy. If we go over to oil's up just a tad. Oil prices up on geopolitical risks, easing tariff worries. So that's also telling us that there's some worries coming out of that. Let's go over to cryptocurrency, see it's down a little bit today. There was a big bill that passed on I think it was the House or Senate last night in the crypto world, and it's going to be good news, absolutely great news for the crypto world in through there. So that's what we're seeing so far in the markets, folks. Let's get over and see what the Federal Reserve's, are they going to cut rates at the next meeting? So how we try to figure that out, we go over to the CME Fed Watch tool and see, when the Federal Reserve meets in 13 days, what's the expectations that they're going to do? Folks, you can find all these live on your internet. So just go to the CMEgroup.com and you'll find this calculator. But you go down through here, and here's the probabilities. Let's click through here. And this is going to tell us what the probabilities are of a rate cut coming down the pike. So right now, the federal funds rate is 4.25 to 4.5. You're going to see that right across the top through here. So right now, we're at 4.25 to 4.5% on the federal funds rate. This is the rate the Federal Reserve controls. Okay, the July 30th meeting, there's a 97% chance they're not going to cut rates, folks, and nobody's expecting them to. But now the September meeting is when, there's more than a 50% chance that they're going to cut at that meeting. So far, the economic news that we have out today is pretty darn good. You go over to the bond market. Let's see how bonds are faring for the day. The bond market is up 4 ticks. Not really anything to write home about. So mortgage rates aren't going to do really anything today. But I think what the average investor's doing right now, they're really not putting a lot of money into bonds. They're just going to see how tariffs and everything else kind of work their way through the systems. But what they're focusing in on now is earnings, corporate earnings, that is, and how that is affecting the stock markets. And I think a lot of people are piling into the market right now because they don't want to miss this FOMO opportunity in AI and a whole bunch of other things across the board. So what you're seeing right now is basically people moving their money back into the equity markets that you're seeing right through here. I would do the same thing if I was them. But the bond market is just sitting there waiting just for some tariff news to figure out where bonds and interest rates are going to go from here. So my expectations are we're not going to really do anything today, might really not do anything tomorrow. As the tariff news, we get more and more of this tariff news coming in each day, it's going to really affect these things. And stay tuned each day so you can come back and understand how all this news, even the headline news that you see across the board, affects these things over through here. So I hope you understand what's happening today. My short-term, mid-term, and long-term goals are this. If you put in your application today, we're probably going to lock you in because I don't know what's going to happen. Trump can tweet or just say something that could make the markets rally or could make the markets crash. So right now, if you're putting in your applications, I'm most likely locking you. If you have a duration of maybe 60, 90 days, we're going to just hold. We're going to hold, see what happens to rates. I don't think they're going to spike anything high, but I really don't think, I think they're in a pattern right now that they can move either which way. So I'm going to tell you a little bit about myself here in a second to help you navigate interest rates and when you're trying to get pre-approved for a mortgage to buy or refinance. Here's the dilemma that you have. Who do you choose as the lender? Okay, your realtor is going to recommend somebody to you that you're going to get from news from friends and family and things like that. Here's what you're looking to do. You're looking to work with somebody that has a lot of experience and knows what they're doing and also has a lot of options for you. Let me explain to you a little bit about who I am, what I do, and we have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. My name is Dan Frio. I'm actually a mortgage loan officer licensed in all 50 states as well as Puerto Rico. And the reason why is I actually work at a federal bank. That gives me a federal license. The cool thing about about our bank is we're also a large mortgage brokerage. It's the easiest way I can explain it to you. So we're a federal bank and also a huge mortgage brokerage. And what I mean by that is we're set up with 33 lenders. And it's for you. Because what you're looking for is you're looking for competitive rates and the program that you can really trust in. We got that all here for you. Folks, I've been doing this for over 35 years. I'd like you to use my expertise and my knowledge to navigate you through this home buying process or maybe even the home refinancing process. Now, here's what we do. We're set up with 33 other banks. I can offer you their programs and their rates just using my system. So that's how you can get quotes up to 30 different lenders with one application and one credit pool. If you go to the rate update, there's a whole slew of information here for you guys. It's not just a normal website you go through and you just scroll down to what you want. Let's go across it real quick to help navigate you through what you can do on our website. First thing is, if you really have some questions about buying or refinancing, just schedule a consultation. This is the easiest way. It's not a hard pressure sales. We're basically just going to get all your information from you and say, okay, here's the program we'd most recommend for you. And then we're going to show you how we price over 30 different lenders to get you the best rate out there. That's the first thing. Refinance, if you're looking to refinance, pick that perfect time. Because many people they start the process when the rates are low, and then by time, they get everything cooking, rates already jumped up a little bit, and you miss that opportunity. Well, click this refinance tab. Tell me what rate you need to refinance. I'll make sure I monitor that on my end. I don't sell the data, and I'll reach out to you as soon as that rate hits that. But if you already got a quote from a lender, 2 or 3, do me a favor. Pick your best quote out there and hit the loan estimate tab. What you're going to do is just upload your loan estimate into here and give me your details. What I'm going to do is I'm going to do a personalized video back to you to explain to you how we can do or what we can do for you. Can we get you lower rates? Can we get you lower fees? In most cases, we're doing both. So check out that tab right through there. Other than that, folks, I'm going to see rates just stagnant today. It was down just a hair yesterday, but the markets right now are telling us the markets are just going to stay steady. They are up 0.06 right now. I don't think there's going to be a big rally into the market, but we did have great news. But the better the news is in the markets, well, the better the chance is there's not going to be a rate cut. So that's our report for this afternoon or this morning, folks. I will be back at the closing bell to let you know how all this mess ends for today. I hope you have a fantastic day. Enjoy the weather. Be safe out there, folks. God bless. See you later this afternoon. Bye-bye.